Welcome to Between Two Chairs, Demystifying Commercial Real Estate, the podcast that brings you the latest insights and trends on the South Florida commercial real estate market, with your hosts, Fernando Arencibia Jr. and Jennifer Wollmann. In each episode, we dive into the world of commercial real estate and break down complex concepts to make them accessible for everyone. Whether you're a real estate professional, a curious investor, or just interested in the South Florida market in general, Between Two Chairs is the podcast for you. So pull up a chair and join us.
Welcome, everybody, to another episode of Between Two Chairs. My name is Fernando Arencibia Jr., and with me, as always, is the very entrepreneurial Jennifer Wollmann. Jennifer, say hi.
Hi, everybody.
So, Jennifer, we have, as always, a very special guest, and I know that this is our favorite podcast is when we have a guest in-house. So would you do the honors and introduce our special guest today?
Sure. Jon Hilley, also known as Mr. 1031. Is the founder of 1031 Specialists, and he brings both Wall Street and entrepreneurial experience to our discussion today. After starting his career at Goldman Sachs, he has spent the last decade investing privately and now leads a tech-forward qualified intermediary platform designed to set new standards in client service and innovation. So first off, Jon, I love that you're flow grown. For those of you who aren't from Florida, that just means Florida grown. Jon is from Jupiter, just north of us, and he went to UF. And like a lot of Floridians back then, went from the Big Orange to the Big Apple. So tell us a bit about what growing up in Jupiter was like, your times as a Gator, and your move to New York City and Goldman.
Yeah, the Jupiter back then was still some dirt roads, believe it. And Greg Norman had his place, and the beginning of some of the golfer movement there. And then it just boomed over the last 20 years, as you know, right? And I don't know if some of that was Alan Jackson's 5 o'clock somewhere video, which was filmed right across the river from the Intercoastal from the Jupiter Lighthouse or not, but Square Grouper certainly changed the dynamic of that little restaurant and bar. So yeah, it's a great little town. My folks are there. My wife's folks are still around there too. But yeah, it was time when I was 18. It was time to go, and so I went to the University of Florida. Did a little bit of study abroad in Paris with some dear friends, and had this idea that I really only wanted to be on Wall Street. The problem was at UF, the career fair that I went to, there was only one Wall Street firm, and they were hiring for one operations job. That Wall Street firm, and there was 300 people in the room. And I looked around and I said, man, it's going to be tough to get this one single job. That one firm was Lehman Brothers, and that operations job probably didn't last very long, given that a few years later it was the 08 crisis. But figured, hey, I got to probably do this myself. And so I started networking with some alumni at UF, some others at Goldman, and really was able to kind of get the job that I want, in part because I just think I had more interest in and demonstrated more interest than, maybe some of the kids at Harvard or MIT. So they chose me. I got to spend 3 years there. And after 3 years in the investment management division, I really had my eyes set on finishing the CFA program, which I was able to do, and then also going to the buy side, which is sort of this term for the investing side of the business. And got to work at HIG Capital in Miami, which is a very big private equity firm there. So spent a couple of years there. And then moved to a family office that was then started by a mentor of mine at Goldman. So, I sort of view the first kind of 10 years of my career at a school as, the finance years. And, it was a really wonderful experience. But, I just thought after 10 years, hey, I want to go and operate some businesses. And so while I was at this family office, we started investing we really were unconstrained about what we could invest in. One of the things we started investing in was early days cannabis companies. And so after doing a bunch of the work and investing in some of these companies, I said, I think I think it's time to be an operator. And so I became the CFO of some of these cannabis companies, sold a couple. The biggest one, or the latest one, I should say, is what really brought me out to Denver. I raised, about $150 million for this firm called Mile High Labs, which is the largest extractor of industrial hemp into cannabinoids in the world, and really went big. Had a whole plan to really be the ingredient supplier for retail brands across the country, but then also across the world. Bought a 443,000 square foot pharmaceutical building from Novartis out of Denver.
Wow.
To go from ingredients manufacturer to finished products manufacturer. Partnered with one of the world's largest ingredients brands, or ingredient suppliers, I should say, to Coke and Monster and all of these firms. And I think at that time in 2019, CBD was the number one Google search term in the food category for the whole year. And so it was quite the zeitgeist, quite the boom. And then, the market just never really got there. It never developed in the way it was supposed to, largely because of lack of regulations, amongst other things. But that was the sort of second phase of my career, which I consider the operating phase, which was primarily in the cannabis space. And, after that journey, I just said to myself, I'm not ever going to do that again. I don't want to be in this market anymore. And so I had a bit of time off to sort of figure out what's next, and worked with a venture capital buddy of mine from UF, and started poking around at this weird space around DSTs. And we were looking at a much kind of different, bigger idea in this sort of category of real estate. And after 6 months of work, I just said, that's a really good idea. I think someone should build it, but that ain't for me. That's going to take 5 years to build, probably take 50 million of equity. And I just went on that roller coaster ride. I'm not doing it again. So, but part of that exploration is where I find myself today, which is it opened my eyes up to this weird space of qualified intermediaries. And so 3 years ago, we launched 1031 Specialists, and it's been a fun journey. Happy to talk more about that.
So real quick, tell us a little bit, just because we tried to demystify real estate, about DST, otherwise known as Delaware Statutory Trust, and what that taught you, or what that meant, and how that led you to here.
Yeah, so DST is really just a structure. And inside of that structure can be any kind of real estate asset that a sponsor wants to put into it. So it could be hospital, it could be land lease, could be multifamily portfolio. And that structure allows for the securitization of that asset. So basically you can chop it up into little pieces and sell it to investors. Now, importantly, the DSTs cannot be sold by traditional commercial real estate brokers. They have to be sold by licensed securities dealers. So there's an extra level of regulation and a different sales channel that sort of got built around these products. They are wonderful tools if you want to go from actively managing a multifamily building and you want to retain the tax benefit of the 1031 exchange, so you can continue to defer your taxes. You can use the DST as your replacement property option. So what we've seen is a ton of investors go from active to passive through this DST structure. Now, they're also not perfect structures because there's a large level of fees inside of them. And for the fee-sensitive investors like myself, they may not be the best tool, but they are an option for investors.
Perfect. So tell us a little bit about how your experience investing. Now, do you invest in commercial real estate as well, or was it mostly the investing in the cannabis field that led you to 1031 Specialist?
Yeah, I mean, we've done some investing as a family in real estate around the Goldman era, but then afterwards I was in Miami. So, we invested our money there, and I met my wife there. And so our real estate investing has really just been sort of for mostly for personal use. I've got an investment property here in Denver in the Rockies, but no, all of my investing has either been in public equities or operating businesses.
Okay, perfect. So how did that help shape what is now 1031 Specialists?
Yeah, I think the investing part just allows you to at least it allowed me to be really curious about, man, how does this market structure work? Who are the players? Who are the employees at these companies? How does this business operate? and how does it make its money? And those are the sort of foundational elements that then allow for a decision. Do I want to do this with the next phase of my life? And the dynamics inside of the qualified intermediary space were just really fascinating. Like, I haven't seen anything like this in all of my years of working on hundreds of companies. And some of those, so here's the sort of general thesis in a nutshell, if you want to allow me to do that. The 1031 rules have been around for more than 100 years in this country, and in their modern form, something like 50. Okay. And this service exists in the biggest market on planet Earth, real estate, right? And specifically, these are US based rules. But here's the thing. This is a free lunch given by the US government to real estate investors. And yet, despite the choice in front of a real estate investor, do I want to hit the button that says pay tax, or do I want to hit the button that says no tax? Only 1 in 7 real estate investors chooses to do a 1031 exchange. Okay. So it is a largely under the radar niche in terms of who provides this. So if you want to do a 1031 exchange and get the deferred tax benefit, you are required by rule to hire a firm called a qualified intermediary. Okay, that's us. Some people call them accommodators, but qualified intermediaries is the term that I use. We provide a very narrow service in a much bigger real estate transaction. Okay, primarily, we consult with clients to make sure they know what they need to do to be successful at their exchange. We produce the exchange documentation that'll get you the tax benefit as the real estate investor. And then importantly, we hold on to your funds during the exchange period. And that is required by the IRS as well. So we are sort of this forced function into a much bigger real estate transaction. Okay. For those that choose to defer their taxes, they've got to hire a firm like ours. Well, there's only 225 firms that do this across the country. And 90% of them are 5 people or less. So there's only 25 firms in the entire country that are 6 or more employees. Okay, so it's a really, really tiny niche. And in aggregate, if you look at all of the employees from admin to sales to execs, there's less than 1,000 humans that do this work. If you look at title and escrow, there's 150,000 title and escrow professionals. Okay, so and there's 600,000 CPAs in the US. So the point is, it is a tiny, tiny niche in the biggest market in the world, and one of them. And I found that dynamic really interesting. And I also, when put against this strange fact of, 1 in 7 or 15-ish% do a 1031 exchange, you start to think like what's going on here? Why aren't more people doing this? Who are these big players of the 25 that are kind of 6 or more employees? And so what I did was I looked at all of the public filings, because the 4 biggest ones are owned by publicly traded financial services firms. Okay, Fidelity National owns IPX, Stewart Title owns API, and so there's four firms that are all publicly traded. Well, my first go-to when doing research is, let me look at what's in the filings. Do they talk about this business unit in their public filings, in their Ks and in their Qs? I looked back 20 years in all 4 of these firms. They didn't mention their qualified intermediary business unit a single time. And when you see that and you know what's required to be disclosed, the flags start to pick up. You're like, that's really interesting. Why wouldn't they, given how much money that these things produce for these public companies, why aren't they disclosing this? And so all of these dynamics combined just made me dig even deeper and say, okay, I want to do this.
So I love that you did. And I know we spoke on the phone before, and I was like, okay, so 1031, as you said, it's been around for hundreds of years, et cetera. What makes you guys different? Because I was really impressed with the fact that NAR's Reach Companies picked your company, 1031specialist.com, as a 2025, I believe it was, right, commercial partner. So tell me a little bit about how you got there and what differentiates you. It's the same as in real estate, right? To your point, there are a lot less intermediaries than there are real estate brokers, but we're always trying to differentiate ourselves from the other guys out there. So tell us about you guys.
Yeah, I think like acknowledging the fact that this is really a commodity at the core is important, right? Like we consult with clients, we all produce exchange docs, we all hold on to the funds, or really our bank partners hold on to the funds for clients. These are the core components of any firm that I compete with, and they don't really change. Like those are the pieces, okay? So the question is, how can you be better than everybody at these pieces? Okay. And really, I think the first thing is to recognize like we're in the client service business. And so how do you build a better client service model that you can actually explain to people in a way that says, oh yeah, like these guys are maybe charging me $100 less, but I want to go with you guys. And so I think at the margin, the question is, yes, you guys sell commercial buildings and it's the same service. Okay. We do facilitate exchanges for investors and it's the same service amongst our competitors. But why do people choose you? And how do you get them to understand that difference? Because that difference is meaningful and it's vast. Okay. And so part of the thing for me is if you sort of go back to this data point of 1 in 7 commercial investment sales is 1031s, you got to ask yourself, why is that? When this is a totally free lunch, like if you're an investor coming to us and hiring us to facilitate your exchange, I'm going to charge you about $1,200 to do it. Flat fee, that's it. And if you're not successful, I give you this $1,200 back. So you haven't actually paid anything for it. And guess what? There's no penalties from the IRS for trying a 1031 exchange and then deciding, hey, I haven't found what I wanted. I'm just going to pay the tax. So it is effectively free tax insurance, okay, to hire a qualified intermediary, specifically to hire us because we get the fee back. So why aren't more people doing this? And at the core of this, I think it starts with the 4 main competitors that are in this space that a long time ago, I think, decided that they were going to stop spending money on marketing, stop telling people about this service, and really fell off on the client service model that we then sort of are championing. Okay. And so I'm pretty confident in saying this. I'm the only QI in the country that has hired an outside consultant to execute a client happiness project. Okay. We're not with our clients for very long. On average, a client sells and then buys inside of 60 days. Okay. So they do their entire swap and exchange in 60 days. And we're not trying to fundamentally change their life, but how do we elevate the experience while you're with us? How do we make it so that there is design a framework so that there is one moment in 2 months with us that you say to yourself, I'm really happy I chose this. And so that was the core exploration of the Client Happiness Project and the changes that we made to really elevate the client service model in a way that, I think most people are in my business or in the sort of deli counter, take a ticket, stand in line type of experience. Whereas I'm I want to be ultra responsive. I want the expertise to be there, and I want to give you everything you need to make a great decision, to defer your taxes, and to be happy with us. And it goes to the simple things. Like here's one example. Okay, Jennifer, we do this kickoff call once someone becomes a client. And you know what they get in the mail? They get a handwritten card from us saying, hey, I'm really excited to work with you and, really happy to be helping you. So at the core, like we're in the joy business, right? Like every client that comes to us should be happy because they're getting a great result. And if they don't get a great result because they can't find what they want to buy, then they haven't spent any money. So they should still be quite happy. So yeah, I think a lot of the ways that we can be different is around this client service model. You can also talk about the AI that we built that I think elevates the expertise and access to information about 1031s. But really the mantra here is, how do we make clients smile each time we're.
Well, I love that that was like a perfect pitch for me because I've got to say, I love your website. I find 1031s, I talk about them a lot and refer people out to intermediaries for more information all the time. But I have never had so much fun going through a website as I did and seeing your video of Scrooge McDuck versus Donald Duck. And I'm going to include that video in our show notes because I think you don't make light of it, but it was such a simple explanation with visuals. And for those of you who don't know, Scrooge McDuck is the Duck. I think he's Donald Duck's rich uncle who swims in money. He literally just dives into piles of money, and there's videos all over the internet. So tell me a little bit, what made you grab onto that? And I think, to your point, it does brings joy, right? Like whether or not I end up being able to do a 1031 because I don't find the deal, just knowing that I have the opportunity to be diving into piles of money and having that visual was priceless. So tell me a little bit about what led you to that specific example for your website and what you do in explaining 1031.
Honestly, look at the name of my firm. It's a part of the tax code, right? And anything related to the tax code for most people is scary, right? It's, man, that sounds too complicated to do. But actually at the core, doing a 1031 exchange is super simple, right? It is hire a qualified intermediary, identify by day 45, and complete your exchange within 180 days. That's it. Hire a QI, hit 2 deadlines, you've deferred your taxes, which is way better than paying tax every single time. But it is a scary topic. And so I think part of the 1 in 7, part of the lack of frequency of 1031s is not a recognition that it is scary for a lot of people. And so how do you make it accessible? How do you make the message really simple so that people can say, oh, I want to do that. Like that doesn't sound that hard. And so these sort of esoteric or difficult to articulate math concepts or, IRS tax code concepts, the more you can make them tangible, the more they will sit and colonize your mind, and then you'll be able to tell your friends about them. And I think that's a large part of it is, for me, when we were applying to the NAR REACH program, they asked me like, hey, Jon, what would success be like for you? And I said, okay, in 10 years, if the frequency of 1031 exchanges went from 1 in 7 to something closer to 1 in 2, I will know that I had an impact on this market. And so the way that I think about the business that we're building is in a lot of ways, how do you change that number? How do you get people to understand this a little bit easier and to want to take action on it? Because it's just not that hard. And they're going to be better off as investors by doing this. So a lot of the things I think about today are, how do we accelerate that 10 or 15-year plan down to 5 years? Like, what can I do? I don't know about you guys, but I've never heard of a radio ad for 1031 exchange services. I've never seen a TV commercial. And some of these companies like Fidelity's firm are making a lot of money each year, yet they don't want to do it, or they're deciding not to do it. And so I think that's the space where you're going to see, the 1031 specialist brand really be differentiated. Like, yeah, the client service model is different, but from an awareness perspective, a marketing perspective, you're going to start to see a bunch of stuff that is hopefully like this Scrooge McDuck analogy for you, Jennifer, right? Where it's like, okay, I get it now. I want to do that next time.
Right. It's just such a strong visual because even if I had never heard of 1031 exchanges before and had no idea, to your point, and I love that your company's goal is really education, and you have a lot of education videos on your site, which we'll also post in the show notes. But you made something, to your point, that sounds complicated and dry, and IRS, kind of makes everybody's heart and stomach and everything else just kind of clench up, and you made it fun and light. And now I can explain it, right?
Well,
Donald Duck, no money in the pockets after a closing, and Scrooge McDuck. So
well, I also
appreciate
between the video and the goal of joy and the colors, I'm getting those Savannah Banana vibes in here, which I really enjoy. So let me ask you something, because we're entering a period where a lot of owners are sitting on low bases. There are huge potential gains. There's uncertainty about valuations and interest rates. And originally, what I wanted to ask you is, how are sophisticated investors deciding whether to execute a 1031 exchange versus refinancing, recapitalizing, and holding a little bit longer? But I also want to add to that is, when is ideally the best time for you to acquire or to start that conversation with the client? Is it before they decide to sell their property and to exit? Is it once they're under contract? Just because I think from what you're explaining to me, which makes a lot of sense, is that a lot of people just basically give up on even trying to do a 1031 exchange when really the barrier to entry is lower than they are probably assuming.
Yeah, I mean, I am shocked. And I think this goes back to the marketing and education. We get at least a call a week saying, hey, I just closed on the sale of my rental. I'd like to do a 1031 exchange. And then I have to ask, okay, ma'am, what do you mean you just closed? Did title get transferred on this property? Yes, it did. Well, the opportunity to do your 1031 is lost. So I would say 80% of our clients hire us when they're, about to list their property. Another 19% will hire us sometime in escrow. And then 1% call us with an emergency saying, I'm closing in 2 hours. Can you please help? And we will do it. We don't love it, but we will do it just because we're busy and we'd like to plan ahead and make sure everyone's taken care of well. But yes, bring in, we've partnered with hundreds of brokers all over the country. And our job is really, we don't sell anything. We just sit there as a source of education for any broker that just either doesn't have time or doesn't have the depth of comfort with this subject matter. Like, send your clients to us. We will just talk to them, answer their questions, make sure that they understand what their options are, and up to them if they want to do a 1031 exchange or not. But our interaction is largely through broker partners that decide, hey, why don't you just call John or the team at 1031 specialists, right? Fernando, the first kind of topic or question is, what are investors doing now, and why don't they just cash out refi and continue growing their portfolio? And kind of what drives that transaction decision for a lot of investors? I think it's wise if you've got a highly appreciated asset to just do a cash out refi if you want to hold on to it, because it's low headache. But so much of the conversations we have are around headache minimization, actually. Right. And if you look at the sort of it is like a triangle of options for real estate investors to invest in. At the bottom of this pyramid or triangle is the absolute most amount of headaches you can have as a real estate investor. And what is that? It's probably an Airbnb or a short-term rental. It's a massive amount of headaches there, right? And then as you sort of go up the headache minimization pyramid, you get to assets like billboards, like water rights, like oil and gas rights. All of these are options for real estate investors. Industrial outdoor storage. These are assets that you can 1031 into. So you can swap from a single family rental into something else. Okay. And that something else just needs to be investment property. It doesn't need to be another single family rental. But what drives the decision for so many investors is not, the depth of, what's my rate going to be if I do a cash out refi? And let me just check the math going out 5 years on my pro formas. How do I minimize the headaches in my life right now? And so for those investors that have industrial properties that basically manage themselves for the most part, like, do a cash out refi. It makes all the sense in the world. For others, they want to consolidate 3 properties into something bigger that has less operational challenges, right? They get less calls on Saturday with their family. So I find that the sort of the family reality dynamic of just having to deal with properties that are a little bit more problematic, maybe older, that drives a lot of the decisions for our investors.
I think that answer also helps a lot with one of the questions that I had, which was, how does 1031 strategy apply with the largest transfer of wealth theme that we're hearing among baby boomers who might own a lot of real estate, but the next generation really wants nothing to do with the real estate? And with those alternative investments you gave, I think that provides a lot of opportunity for those boomers who don't know that you don't have to take that money and roll it to 1031 it into another real estate asset.
That's right. There's like, if you look at it, you can swap into any sort of sub asset class in real estate as long as it's investment property or business use property, and you can do it anywhere in the country. And so you basically have like unlimited options, right? Almost infinite options. And so the hard part is just deciding what's best for you and your life and your family and all of that planning. Now, yeah, as you get to this sort of transition in wealth from the boomer generation to the younger one, the absolute least tax efficient thing you can do, like, this is a very morbid subject, right? But let's assume I'm dying tomorrow, okay? And today I give my son my properties. Well, he's going to inherit the basis. And that means if the day after I die, he decides to sell, he's going to pay all of those taxes. And he doesn't 1031 exchange. Okay. But if I've 1031 exchanged all my life, I've got a big portfolio, and then I die and he gets them the next day and decides I'm selling them, but I've passed them to him at my death through my will, then guess what? He can sell the next day and pay no tax on the lifetime of gains that I made happen. And so what you don't want to do is start gifting your properties to your kids. Obviously, talk to your CPA, please. But you don't want to be in a situation where you're giving your basis to your kids. Your basis is basically the number that's subtracted from the sale price to get to your gains. Okay. You don't want to pass that on to your kids. You want to let them step up in basis. And so there's this quite sort of catchy but morbid topic of like swapping till you drop. Right. So 1031 again, 1031 again. And then when you die, the kids are going to get the step up in basis. And that's how they eliminate taxes for their children on the real estate.
Yeah, which is great because we always speak about these tools to be very impactful when you are estate planning, basically, and you're doing a long term, which I think goes back to your thesis of we want happy clients that are going to come back to us, that maybe they look at us as a long-term partner in those decisions, not just a one-off. I want to ask you about one of the things that really limits people when they're pursuing a 1031 exchange is this 45-day identification period. And outside of a legislative change to the law, right, are you also thinking along the lines of how can we make improvements to that identification period? And I mentioned that also because you identified AI as a component of what you've added to your software and your website. And I'm wondering if we're going to see more efficiencies in that part of the process.
So I think people have this fear about these deadlines as if they're just coming up way too fast. But we've got clients that sell on Monday and buy their replacement property on Wednesday. And you're able to do that if you don't wait until the clock to start before planning. And so your clock doesn't start the day you sign the contract to sell. It doesn't start the day you get into escrow. It starts the day you transfer title and complete the sale of that property. So you've got all of this time typically. So typically we're brought in like 2 months before the transaction closes. So you've got those 60 days plus the 45 days. You've got 3 months and change to think about what you're doing next. And so our thing with our clients is, look, like, go talk to Fernando that just sent you over to me. Go talk to Fernando and have him and his team start working on a list of replacement property options that fit your criteria, right? Get ahead of these deadlines, and they're not so scary. They're not so difficult to get through. Oh, that's the first thing is, like, if you're planning ahead, like for so many of our clients, they're saving hundreds of thousands in taxes, right? This is surprising, I think, to a lot of people, but you're subject to 4 layers of tax, up to 4 layers of tax when you sell investment property, right? It's state, if you've got a state like New York or California, that's very high state tax. Federal, of course, of 15 or 20, net investment income tax if you make over $500,000-ish a year. And then the thing that people forget is the depreciation recapture, right? So these 4 layers of tax can be as high as 40% of your gains. We use sort of 30% as a rule of thumb that kind of applies universally, but each person's got to do the math on their own. It is basically a full-time, it's 1 year of pay for a lot of people, these taxes that you're going to come out of pocket for. So I just say, like, look, treat this with the respect it deserves. Treat it like a full-time job, because that's the amount of money you're saving. So I think that messaging really gets to people. They're like, okay, you're right. There's a lot of money I'm going to pay here. So let me take this seriously. Let me plan ahead. Let me start working with Fernando and his team and get ahead of these deadlines. Because there's really nothing stopping you from like getting your replacement property under contract prior to close, right? Just do it contingent on the sale closing. Then you de-risk that.
So let me ask, so we're seeing a lot of people who are selling their real estate along with the business. So sometimes they're selling the whole corporation, which fine, that's just one sale, but oftentimes they're splitting the real estate from the company. It becomes an asset sale and real estate. How would you 1031 something like that? Can you 1031 the business as well, or can you only 1031 the real estate?
Right. So during that transaction process, when you're negotiating the sale price, you'll typically bring in a valuation expert, your accountant, or some specialty firm that comes in and says, or sometimes commercial brokers will come in and say, like, okay, I think if you're selling this car wash, as an example, the real estate is, $2 million, and the operations of the car wash are $500,000. And then you cannot 1031 the operations side of it. So the $500,000 you're going to have to go pay taxes on. But the $2 million of real estate, you can in fact 1031 into some other investment property. So, but you'll just apportion a certain amount of the acquisition price to property versus operations.
All right, great. And tell us a little bit more about the golden strategy, because I know right now with interest rates super, super high, and as an investor that's in an investment group, we always talk about seller financing. So can somebody who seller finances a sale do a 1031? And what does that look like? Because isn't the note boot or something?
So we get these questions all the time about seller financing. And yeah, given what's going on with the financing and how difficult it is these days in some cases to get financing, the seller carrying a note can make all the sense in the world. It does, however, make their 1031 more challenging. So the rule is, the day you close on the transaction, let's say I sold a property for $1 million and I did 100% seller financing. And in 5 years, there's a balloon and I get my $1 million. Guess what? I sold the property today. Even though I didn't get any cash, I sold the property. It is contractually sold. So regardless of when I receive the cash 5 years from today, that is my date of sale. And so I'm either paying taxes on the $1 million of, let's say my basis was zero as an example, but I'm paying taxes on the $1 million of gains, even though I didn't get any cash, right? Or I'm 1031ing into another, $1 million property. But then the question is, how do I get, if I don't have any other cash sitting in my bank account somewhere, how do I buy $1 million property? How do I do that if I don't have any cash at all? And so now I'm put in a difficult position as the real estate seller of, what do I do to minimize or optimize for taxes in this situation? So you can do a couple of things. You can, number one, make your note walkable. Okay, so you can put a clause in your note, in your seller note, that says, someone else is allowed to hold this note. Okay. You might not have to pay me, but you're going to pay this note, whoever is holding it. And so if you make that note walkable, you can use it as currency on your replacement property acquisition. I think people are unaccustomed to this, and it makes it quite challenging to do that. Okay. The most sort of frequent outcome that we see is, I do have money in the bank over here. I will buy $1 million replacement property to complete my exchange and to defer all the tax. But I do have to figure out how to get it financed and bring cash to close. So the point is, as long as you get to the, sort of net sales price or reinvestment goal on the other side, however you do it, it's possible. Seller financing can just make it more difficult. The best scenarios of seller financing we see are not the 100% seller financed example I just gave. Rather, it's 20% or 30% of the sale price is seller finance. And that can work because then I have some cash to finish the exchange on the other side.
Great. Thank you. What else? What other tidbits? I mean, I haven't done a 1031. I just never found the replacement property for the couple times that I've used it, just because of the market at the time when I sold was very high and all the other replacement stuff was high. So is there a best time to look at selling for your replacement property? Because I also know a lot of sellers that are like, oh, my favorite buyers are people who say it's a 1031 exchange because they're willing to pay more. So what has your experience been with that?
Yeah, I mean, I reject that notion. I think it's very prevalent online, social, like, hey, I've got a 1031 on the other side. I'm going to take him to town and, sell for more. Here's the thing though, like I tell clients, do not tell anybody you're a 1031 investor. There's no reason that they should know that. Otherwise, you're just giving them information that they may use to negotiate against you, right? So that's number one, is don't tell anybody information that they're going to use as leverage, okay? The thing is, I did this table about a couple years ago that went semi-viral on X, and it was starting with $100,000 and was comparing your end result after paying tax each time at 30%, and then choosing to 1031 each time. And so transaction one, and each time you'd make 50% of your equity. So basically transaction one, you start at 100K, you sell it for 150. And then you do it again and you sell that for 225. And you keep rolling down all the way, okay? Well, if you choose to pay tax each time versus choosing to defer your tax each time, let's say in your entire career you did 20 of these trades, where you just kept rolling your money 20 times, which, I don't know, if you start at 20 years old, it's maybe possible, right? If you choose to defer your taxes, you are $292 million richer than if you pay tax each time. And so for me, this idea of, we've got it on some of our swag that we give away, but this idea of compounding is a very powerful one. So compounding your wealth tax-free with 1031 exchanges, compounding your knowledge each day, just getting a little bit better, a little bit smarter each day, will yield incredible results 10 years down the road, right? Compounding your network. This idea of compounding is one of the most powerful forces in the world. And I just encourage people to really understand that and what it means, not just for deferring taxes and not paying them today, but 10, 20 years down the road.
Awesome. You have more.
Just because you're so data driven, right? And year after year, there has always been, the 1031 exchange has always been in danger, right? Because there are people that look at it, and I'm talking about from an advocacy perspective, right? At the federal level as a place where they can find monies to fund other programs, right? But there is a great benefit to the economy overall to have these 1031 exchanges, just because of the jobs that you generate, the amount of revenue that is generated out of every single transaction that happens in commercial real estate. They say, I know it's 1 out of 7 do a 1031 exchange, but about 30% of commercial real estate transactions, there's a 1031 exchange involved, maybe not on each side, but at least in one of those sides. And so I wonder, do you have a little bit of those numbers as to what the positive impact to the economy has been to maintain the 1031 exchange rules?
Yeah. There has been real fear around the 1031 exchange getting, this, we call it stroke of the pen risk in finance, right? Like someone decides to change the rule and overnight the business is gone. And, in 2017, the Trump Tax and Job Cuts Act, the fear couldn't have been more real because prior to that, you were able to actually 1031 your private jet. So you could sell your private jet, buy another private jet, and defer the taxes there. Hertz rental car they were 1031ing entire fleets of vehicles, right? So they were buying these cars, depreciating them down, 1031ing them to the next fleet, okay? But what happened in the 2017 Tax and Job Cuts Act, personal use 1031s, or really non-real estate 1031s, were eliminated. Okay, so there was real fear that both were going to get eliminated, both the private jet 1031 and the real estate 1031. And so around that time, there's an organization that it's a member organization for qualified intermediaries called the FEA. And the FEA, they brought in Ernst & Young to do a study around what is the economic impact of 1031 exchanges, right? And you can find that on the FEA website, certainly. But the point is, it is not just the direct impact and really the brakes it would put on real estate transactions writ large across this country, but then you're talking about all the ancillary services like direct and indirect related to the transaction, right? Commercial brokers, title and escrow, all the appraisers, all the people that support this. And let's just say it would probably put the US in certainly a recession, potentially a depression if you just got rid of the 1031 exchange. Okay. So it is real estate is a massive driver of economic wealth. I think what people don't really appreciate is, the average 1031 investor is not some, massive real estate firm or REIT. It's like, it's your uncle down the street that is, transacting for $500,000. And so for most people, it's actually like the rope to get out of, where you are into the better sort of place that you want to be, the better class that you want to be in. It's through 1031 exchanges. And so I think once all of this data was unearthed and, Congress just said okay, we'll save some money on the private jet 1031s, but we're going to leave this in place. What's interesting is, so Evan Lydiard he's the guy on the Hill for NAR. He's been lobbying on this topic for, 30 plus years.
He's the best.
He's the best. And so I was on a panel with him and he said, John, this is really the first time I can ever remember where we're now talking about going on offense as it relates to 1031s and really talking about this 45-day rule and how do we, sort of make this a little bit more palatable, because it's a sort of made up number, right? Get your ID form in by day 45, but you don't necessarily have to give it to your qualified intermediary. So it's just this very strange topic inside of these rules. So my hope is that they're able to make some progress there. That would be great.
Yeah. Well, listen, I think, Jennifer and I are very, very big proponents of the 1031 exchange rule. And I've been involved in a few where all of my clients, to your point earlier, have been mom and pop, small business owners. I had one where it was a small business owner. His neighbor came in and made him an offer on his property. He was looking to downsize anyway, but now he had a decision to make. And the only way that it would make sense is if he would have been able to do, which is what he did. He did a 1031 exchange into another property, moved his business there, and was able to actually, make it happen. And to his neighbor, they were able to expand their business, which was another small business as well. And in reality, it has just allowed them to continue to build generational wealth, to be very smart. And also, it does create this sense of that money is moving. And when the money moves, there are a lot of people that benefit, right? Out of every single real estate transaction, there are millions that are generated, but more importantly, there are jobs that are being created. There is movement in the economy. So there's a reciprocity here that is happening. And so that's why it is, really worthy of not only existing, but to your point of it being modernized.
Well, including the benefit to the local economy, right? Because now the local governments have a new tax basis from the properties, because that doesn't get 1031.
Yeah, for sure. So just know that we are rooting for you to really reach your goal of moving from 1 out of every 7 transactions to 1 out of 2 that do 3031 exchange. And we really love the way that you have structured yourself and put yourself in a position to influence that journey.
Thank you, Fernando. Yeah, guess what? Sometimes in life there are win-wins. It doesn't have to be win-lose.
Right.
These are wins.
Right.
And why not continue? All I want to find in life is win-wins, because those make me happy. So, yeah, it was wonderful talking to you, Fernando, and you, Jennifer.
Great. Is there anything we didn't ask that you wanted to have us ask, or something that we didn't know we should have asked that you want to share with us?
Let's see. I think we covered almost all of it, actually. I'm really pleased that just this gets an audience and more people can hear about this maybe for the first time. But yeah, just understand, if you own a piece of real estate and you're thinking to sell, just call us. We'll answer any questions. We'll tell you how to do it. And let's keep the compounding train going. How about that?
Absolutely. I love that.
Perfect.
And we will definitely put the link to make sure you all get to watch that awesome video, and a link to 1031 Specialist. And we'll also add a link to that Ernst & Young breakdown so that you can see the numbers, which are, incredibly impactful. So, Jon, thank you for joining us. And for Jennifer and I, we just want to thank you guys for pulling up a chair and joining us time and again. Jennifer, say bye.
Bye.
Bye, everybody.